Hello, and welcome to Pro Trader Strategies Market Commentary for Friday, February the 19th, Expiration Friday. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. All right, having that out of the way, let's get this on. We have had some economic data come out today that's pretty important here in the United States and across the pond. In Great Britain, we had retail sales come in better than expected at 2.3%, was expected at 0.8%. We also had Canadian core CPI, which is Consumer Price Index, and that came in a little bit better than expected at 0.3% versus 0.2%. And core retail sales came in worse than expected at negative 1.8% versus a negative 5% expected. The Canadian CPI, again, Consumer Price Index, came in a little bit better than expected at 0.2%, and the overall retail sales for Canada came in at negative 2.2%, was expected at negative 0.7%. Here in the United States, we had the CPI, which was right there unchanged, pretty much at 0%. And the core CPI was slightly higher than expected at 0.3%, came in at 0.3%, was expected 0.2%. One thing we have going on later this afternoon is Fed member Mester is going to be speaking. He's a voting member, and it'll be interesting just to see whether or not he starts talking about negative rates or any of that type of jargon. So I don't think that's going to really be a market mover later on in the day. Since it's Expiration Friday, the market's going to gyrate a little bit back and forth into positive territory probably, but back and forth as the bulls and the bears really battle this out to get their prices to try and help pin their options. If they're wanting to be out of the money, they're obviously going to push the market that way. So just keep that in mind going forward. This is the NASDAQ, as I mentioned. This is /NQ, just slightly in positive territory at up 12 points. They were up almost 15 points just a minute ago, but just slightly coming off. And if we look at the E-mini S&P, it's rallied off the lows from the morning. We opened up basically on the lows, or opened up, traded off, and then came back a little higher. Overnight they were much lower, as you'll be able to see on the 15-minute chart of the E-mini S&Ps. That's this chart here, and as you can see overnight, right after basically midnight, we just started slowly selling off, and on the opened on the lows for most part, and have continued to just have a slow rally. They tested unchanged on the E-mini S&Ps just a couple of minutes ago, but just fell short of that. And then on to crude oil. The only trade that I put on is in USO. This is a chart of crude oil, the futures /CL. But yesterday afternoon, I was watching CNBC and saw one of the talking heads, actually a friend of mine, saying that he was bullish on oil, thinking it was going to go above 35. And as you can see, I have the line right there at 35, and that is a resistance area. And I see the risk to the upper band or to the upside in crude oil. It could much easily go higher than it probably will easily go lower because of all the things that I've talked about in other daily market commentaries. The cost of carrying this oil, storing it, the cost of turning the crude oil into petroleum is another big factor. So at the end of the day, anything much below $25 a barrel is pretty difficult to sustain. So having said that, my strategy here is in USO, and that is the ETF for the crude oil, as you can see here on this chart here. And I sold the March 9.5 calls for 35 cents. Now, I'm looking to get out of this rather quickly just because this strategy, the risk is to the upside. It is undefined, and it really can't go much lower, but I see this high implied volatility. Saw this big bear candle, knowing that the resistance is at 35, which kind of correlates to right here at about 10. So I picked the 9.5 strikes to get that 35 cents. It's because this ETF is such a small underlying, as in price wise, you just really can't get a lot of premium for that. So I'm going to be looking to cover this after, maybe even only 15 cents to the, if I can get 20 cents out of this trade, then that's probably where I'm going to look to cover that. I'm not looking to take a bunch, but I wanted to make a stand and draw my line in the stand. That's the only reason for that trade. Make a little bit of money on it and be a contrarian to some of the talking heads, I guess, if you will. And going into today, we're going to be doing a webinar on iron condors. I'm going to be trying to put on a bunch of trades between 5 and 10 because I'm going to talk about the probabilities of success on this type of trade. So I'm going to be putting a bunch of trades on there, and that'll be a really good one. So I'll be asking for your guys' opinions on strategies or around this strategies, looking for underlyings that we can implement this strategy to get a little bit of back and forth with you guys. I would like to see some of your guys' input. I have a list of stocks here that I've been looking at that I think are going to be really great candidates for an iron condor. The reason why an iron condor is good right now in my eyes is, you guys know I've been directionally biased. On the downside, I got that one, and then on the upside, after covering a lot of my calls, I was long going back up. So now, after you usually see these big moves rather quickly, you're going to have a tendency to have the market trade a little bit sideways going forward for at least the next few weeks. So I think this is a great time to start implementing this iron condor strategy around some of these stocks that have had some big moves and they start settling down. It's kind of like the jumping bean. It jumps real big once and then kind of settles down and then pop, and then it'll bounce either up or down rather quickly. So this is going to be a good time to implement this strategy. And we have high implied volatility percent, which is the time that you would want to implement this type of strategy as well from the short side, because when we get that volatility contraction, we get that theta coming out of those strategies rather quickly. So that is why we're doing this strategy right now, and we're going to do it in a 3-part series, if you will. So that'll be a good one to check out at protraderstrategies.com. Go there, sign up for that, and get ready for this 3-part series, because later on, we're even going to be talking about how to defend this iron condor in a webinar down the road. So it is a great strategy for the entry-level trader or even the trader that has several years of experience to get this back in there. Sometimes we get away from this strategy, but it is a really good one, especially if you don't have a market direction assumption, or if you just don't believe that the market has any discernible direction. So that'll be a really good one for just about everybody. That's about all I got for you guys today. Like I said, go to protraderstrategies.com, sign up for that webinar. I hope to see you guys all there because I want some of your input too. All right? If you can't take that, take it easy.